Hello and welcome to Markets Today, the show where we track 6 hours of the day's trading action and 5 headlines. I'm Sonia Shenoy and here are the headlines for the day. The sensex and the nifty end with losses of nearly 1%. IT and bank stocks lead the decline. Midcaps marginally underperform. And Wipro reports a weak second quarter earnings. The revenue growth contracts for the third straight quarter. The growth outlook also worsens. Attrition stands at over 15%. IndusInd Bank beats estimates in Q2. Operating profits rise for the 11th straight quarter. On the other hand, Bandhan Bank misses estimates as profits drop over 4% and asset quality deteriorates. And Polycab sinks despite reporting an all-round beat in the second quarter earnings. Syngene slips after it cuts guidance on weak US outlook. ICICI Prudential Life slides on a margin miss. Bank of Baroda suspends many employees after an internal audit into the mobile app case. Stock ends with cuts. And crude oil prices jumped 3%, hitting its highest level in 2 weeks. Protests erupt across Arab nations after Palestine claims 500 people died in a Gaza hospital blast. Israel denies responsibility and blames it on a misfired rocket by a militant group in Gaza. Well, here's the lineup of what we have in store for you in the next half an hour. In market opinion, Saurabh Mukherjee of Marcellus Investment. In Big Corporate Voices, Amit Chadda, the MD and CEO of L&T Technology, and Venkat Raman Narayanan of Happiest Minds. All right, on to the day's market action. The Sensex and the Nifty lost nearly 1% today, with banks and IT stocks leading the decline. The Sensex lost over 550 points and the Nifty lost about 140 points. The broader markets marginally underperformed the blue chips. Prashant joins in with a wrap-up of all the trading action. Prashant.
Well, down and out is basically what we had on our hands by the end of the session. The cues from overnight were not all that bad or anything. It's just that yields jumped quite significantly. In line with that, equities did not. I mean, the Nasdaq was down about 0.25%, but there was flattish kind of cues. And the market did not start in a very negative way or anything, but it did start to lose traction within 35 minutes of opening. There was a sharp sell-off all the way till about 12 or so. Between 12 and 2 p.m., the market kind of held on. And then starting 2 p.m., there was a second leg of sell-off which took the market down to important support levels. I'll get to that in just a bit. Banks, that was the poorer of the two performers. 1% cut in the Nifty Bank, which again has taken that index to important levels. Now, cuts coming through in financials, right? Bajaj Finance, Bajaj Finserv, HDFC Bank, these are basically the top three losers on the Nifty. Pharma perhaps is the only sector which stood out as a pack. Cipla, DRL and Sun Pharma, they're standing out. There were, in the broader markets, lots of action. So, names like Hutco, MRPL, GMDC, most of them were in the nature of pullback. Stocks have run up quite a bit, especially on some of these government companies, and you saw some profit taking. Central Bank, Moil were some of the others. Syngene and Biocon pullback. LTTS, ABB, Zensar were some of the others which gave up gains. Stocks which went up, and there was a fair list. IRB, Suzlon is at 30 rupees. Orient Cement was up about 7%. Astra Microwave, Aarti Drugs, Jayaprakash Associates did well. Newgen, which had reported numbers, we had the management with us. Spark, Ratnamani, Repco Home, there was CRISIL, there was Tega Industries, which is up about 10% or so by close. We are at kind of not make or break, but important support levels on both the Nifty and the Bank Nifty. And as always, we'll track what the US throws our way when we come back tomorrow morning.
All right, thanks a lot, Prashant, for that. Well, on to the second headline now. Wipro just came out with numbers and they reported a weak set for the second quarter. IT services revenue came in lower than street estimates at over 22,300 crore rupees. Wipro's second quarter constant currency revenue growth came in at -2%. Rima joins in with the key highlights of all that came through. Rima.
Thanks so much for that. So it's a weak showing from Wipro in the second quarter. Constant currency revenue has declined by 2% on a sequential basis. This is the third consecutive quarter when we've seen a top-line decline. Also, the revenue decline at -2% or of 2% is at the lower end of the company's guidance. For Q2, they had guided for revenues to come in between -2% to +1%. So Q2 has come in at the lower end of the company's guidance. For the next quarter, that's the December quarter, October to December period, the outlook appears to have deteriorated because the company is guiding for -3.5% to -1.5%, which basically means in your best case also, revenues are going to fall fall, and they're going to fall by 1.5%. So that's a bit disappointing. Headcount for the company has fallen by 5,000. This has been a trend across IT companies, but for Wipro, it's the fourth consecutive quarter where the headcount has fallen. Attrition, though, has meaningfully deteriorated. Large bookings, or the overall booking numbers, though, is very, very healthy. Total bookings have come in at $3.8 billion, and the large deal TCVs has gone up by 79% on a year-on-year basis at $1.3 billion. But unfortunately, this pickup in order wins is not translating into revenue acceleration for IT companies, and Wipro has reported weak Q2, and it appears the Q3 guidance too has come in lower than what the street was anticipating.
Okay, thanks a lot, Reema, for that. So disappointing numbers coming in from Wipro. But what about the rest of the Midcap IT results that came through today? They failed to cheer as well, because a lot of companies reported a lower guidance in the second quarter. You want to take us through that as well?
Thanks so much for that. So let me start with the Persistent, since that's the last one to report numbers. It's a mixed quarter. Top line growth looks good. It's a 3.2% constant currency revenue growth, but margins owing to wage hikes have missed street expectations, having declined by 120 basis points, coming in at 13.7%. Deal wins, though, are at record levels. LTTS, that's L&T Technology Services, took a knock today. This is after the company lowered the full year guidance. They're now saying revenue growth will be 17.5 to 18.5% for this year versus 20% that they had earlier guided. In fact, Happiest Minds too, despite a good Q2, lowered the full year revenue forecast. At the beginning of the year, they were hopeful that the organic revenue growth will be about 15 to 20%, add in a little bit of an acquisition, revenues from an acquisition, and they will be able to clock in a 25% revenue growth. But now they're saying organic revenue growth will be only 12%. Zensar reported a muted top line, but margin performance looked good, but the stock corrected quite sharply in trade, considering that it's run up 150% year to date. Tata Elxsi was the only one which reported good numbers, a beat on revenues, beat on margins, and Kotak today raised the EPS estimates by 5 to 7%, given the Q2 beat.
Okay, well, Amit Chadha, who's the managing director and CEO of the company, said that they will try to achieve their upper end of the guidance. He also expects the fourth quarter to be better than the second quarter. Listen in to what he had to say.
We will continue to work and see what we can do towards the upper end or more if possible, and come back and update in January again. Margins for us, if you remember, prior to coming together with Smart World, we were at 18.5 plus % in EBIT. And with Smart World, we've achieved 17.2 last quarter, 17.1 this quarter. I do have confidence we will stay in the 17% range for now. Of course, our ambition is to get up to above 18% again. We had a very slight change because of the strikes to the extent of less than 50 bips in growth, but we did have that. I would say Q4 will look like similar or slightly better than Q2.
Okay, well, Happiest Minds also was another management that we spoke to. Venkatraman Narayanan, who's the managing director and chief financial officer of the company, expects the third and the fourth quarter constant currency revenue growth to be in line with this quarter. Take a look.
When we started the year, we had a couple of larger names in our acquisition pipeline. We had taken that into account while coming out with the guidance at 25%. So yes, the back of the envelope calculation today suggests that we had taken between 15 to 20% on organic growth, while taking the balance 5% coming in from acquisition. So that was the structure of the 25% when we started the year, and we were progressing reasonably well on that. If you look at the half year over half year, in constant currency, we have done about 12.7%. So we have to do a similar kind of repeat over Q3 and Q4 to meet that number of 12% that we have out there.
Okay, well, moving on, the third headline today, IndusInd Bank reported a beat in the second quarter. The net interest income met estimates at over 5,000 crore rupees, while the profits at over 2,200 crore rupees came in much higher than the estimate of over 2,000 crores. Abhishek joins in with the key highlights. Abhishek, over to you.
Well, IndusInd Bank gave a decent set of results and their numbers of P&L have beaten our poll. The NI is up 1.4% versus our poll, while the PAT is up 6.5% versus our poll. 11 quarters of operating profit growth that you are seeing in IndusInd Bank, both YOY and quarter-on-quarter. So this time around, the operating profit growth is more than 11% YOY and about 2% on a sequential basis. Provisions are down 14.7% YOY and about 1.8% sequentially. The ROA, or the return on asset, is at 16-quarter high of 1.9% when compared to 1.8% in the same quarter last year and about 1.89% in the previous quarter. In terms of the absolute value for asset quality, both the gross NPA and the net NPA are up 3.8% quarter-on-quarter. However, gross NPA ratio and net NPA ratio are at 11-quarter low of 1.93% and 0.57% respectively. In terms of the business momentum, deposits are up 14% YOY and about 3.5% sequentially, while the advances growth remained robust at 21.3% YOY and about 4.7% sequentially. Back to you.
Abhishek, what about Bandhan Bank? That one reported a weak set of numbers in the second quarter as well. The net profit and the net interest income missed street estimates. Tell us a little bit more about that.
Well, it's a disaster number coming in from Bandhan Bank at a time, when lenders of financial entities are seeing improvement in asset quality. There's a sharp deterioration in asset quality of Bandhan Bank. So it's a miss on our estimates. Both the NI and PAT is below our poll. So the NI is 2% below our poll, while the PAT is 4% below our poll. Deposit mobilization, that's grown at 20.4% YOY and about 3.3% quarter-on-quarter. Advances growth is a bit on the weaker side, growing by 12.3% YOY and about 4% quarter-on-quarter. The operating profits, they are down 13% YOY and up about 1.35% on a sequential basis. Cost to income ratio, that's increased both YOY and quarter-on-quarter. But the big picture in the result is the deterioration in asset quality. Gross NPA in absolute value has increased by more than 13% quarter-on-quarter, and net NPA has actually increased by more than 10.5% on a sequential basis. This is unlike seen for other financial entities. Gross NPA ratio, that's inched up to 7.32% when compared to 6.76%, while net NPA ratio has increased to 2.32% when compared to 2.18% in the previous quarter. PCR, or provision coverage ratio, that's remains stable at around the 70% level. Back to you.
Okay, Abhishek, thanks a lot for that. Let's take a quick break, but stay tuned. We'll be back with all the other headlines that we've been tracking for you. We'll come back in a bit. Welcome back to Markets Today. The fourth headline today, Polycab tumbled despite reporting an all-round beat in the second quarter. The net profit came in at over 420 crores versus an expectation of over 380 crores. The margins also came in much higher than street estimates at over 14%. Surbhi Sutaria joins in now with the fine print. Surbhi.
Thanks so much for that. So Polycab, the numbers look good. The numbers are better than expected. There was strong revenue growth in the cables and the wire segment. The EBITDA margins have been maintained despite a rebranding exercise. So the expectation was sequentially the EBITDA margins would drop because of the rebranding exercise and higher ad spends, but that has not happened. So let me take you through the internals. The revenue is up 27% on a year-on-year basis. They've seen a gross margin expansion of 100 basis points. The EBITDA is up 42%. Margins have come in at 14.4% versus 12.8% same time last year, and the profits are up nearly 60% on a year-on-year basis, and that has happened also because of higher other income. Now, when you look at the segmental performance in the cables and wire segment, which is majority of their revenues, there the revenues are up 29%. The EBIT is up 60% and margins are at 14.6% versus 11.7% same time last year. And even if you look at the last 4 to 5 quarters, they've slowly inched from 11.7% margins in the cables and wire segment to now close to 15% margins. There is a 20 basis points decline sequentially, but nothing that big a concern. And in the FMEG segment, they've seen good revenue growth. Revenues were up 8%. The lighting segment was expected to be muted, so that was on expected lines. The losses have expanded over there. Losses of 6 crores versus of 30 lakhs same time last year. In the last 1 year, Polycab has doubled, and it remains to be the most expensive valued cables and wires company. So that is also that we need to keep on our radar.
Okay, Surbhi, stay with us. ICICI Prudential also slipped over 2.5% on the back of its second quarter numbers. The value of new business came in at almost 600 crore rupees compared to 620 crores on a yearly basis. What are the key numbers and what are brokerages making out of it?
Thanks so much for that. So ICICI Pru reported a weak set of numbers. The APE growth was up 3% on a year-on-year basis. The value of new business was down 7% on a year-on-year basis. And the value of new business margins came in at 28% versus 31% same time last year. The expectations were around that it would be at the 30% range. The embedded value was up 18%, but that was largely because of the economic variance. Now, brokerages are largely positive, but they have some concerns, and they say that the margin pressure was due to the change in the product mix. But that is because there was in favor of linked and par products versus the non-par products, which is the higher margin products. There was pressure on the group term business and higher operating costs. They have cut target prices across the board. So Investec has cut it to 625 versus 665 earlier. Morgan Stanley to 665 versus 685. Kotak to 650 from 675, and IIFL to 660 from 710 rupees per share.
Okay, thanks a lot for that. Well, in global earnings, ABP Group reported a jump in the third quarter profits and revenues, but marginally missed street expectations. The company's quarterly net profit came in at over $800 million, while the revenue stood at $8 billion. The ABP Group expects a single-digit comparable revenue growth in the fourth quarter. Well, moving on, Syngene International slipped over 6% after it trimmed the guidance down due to a slowdown in the US-based biotech segment. Ekta is here with the details. Ekta.
Well, for Syngene this quarter, which is a biocon company, it reported what was a steady quarter. There was no problem in terms of the numbers for Q2, but the company has cut its FY24 sales guidance, which is what disappointed the street. I'll get to that in just a second. But first, the Q2 numbers. The revenue was up around 18%, EBITDA 254 odd crores, margins 28%, which was flat on a year-on-year basis and improved on a Q-on-Q basis. And the profit rose both year-on-year as well as sequentially. But the company has scaled down its FY24 guidance due to slowing biotech segment in the US, which basically impacts their discovery services segment. So the company has now scaled down their FY24 guidance to a mid-teen growth in constant currency versus high-teen growth, which was estimated earlier. The company did say that the capital flowing into the biotech segment is now normalizing as compared to the highs that we had seen during the pandemic levels. Now it's coming back to the pre-pandemic levels, and hence, because of that, they have tweaked their guidance on the lower end. The company did indicate that fourth quarter is looking good. They will have a strong end to the year. They are, however, at this point in time, holding on to their margin guidance for FY24, which is around 30%, and profit growth in mid-teens. They've achieved separately the run rate that was expected in the Zoetis partnership that they have, which is basically Zoetis is an animal health company for one particular animal health drug. This partnership started scaling up in Q4 of last year, and they have indicated that they have achieved the run rate that they wanted with this partnership this quarter.
Okay, well, thanks for that. To some more stock-specific news now. Bank of Baroda slipped in trade after it suspended few employees after an internal audit was conducted in the bank's mobile app case. Remember, the Reserve Bank has barred the bank from onboarding new customers on their app. Ritu joins in with the details. Ritu, what are your sources telling you now? What's the latest there?
Well, it's been 3 months since the matter first came to light, and a couple of weeks since the Reserve Bank of India took action against Bank of Baroda for the tampering of customer accounts in the Bob World case. And now we've been given to understand that certain employees have been suspended following an internal audit which shows that there was indeed some fraudulent activity and unauthorized linking of mobile numbers with unsuspecting customers' bank accounts. Although the total number of employees that have been suspended could not be verified, we have been given to understand that the number is not too large. A lot of these employees belong to the bank's branches in Gujarat specifically, and there are others in the north and northwestern regions of the country. We've also been given to understand that although it's been 3 months since the matter came to light, like I said, the suspension orders were only issued on the 16th of October, that is a few days back, in which the bank has cited specifically the tampering as the reason for the suspension. This letter, which we have reviewed, specifically says that there was wrongful registration, activation and deregistration of Bob World app without the consent of customers, which is in violation of the bank's guidelines, leading to these suspension orders. There will be further action taken against these employees. As of now, they have been suspended. In fact, we also spoke to some of our sources within the bank that indicated that when the matter first came to light, Bank of Baroda had initially just transferred these employees from the banks at which these incidents took place to smaller postings, smaller regions. And it is only now that the suspension orders have been issued. Whether the Reserve Bank of India is satisfied with just this action, we'll have to see. But for now, there's still a ban on Bank of Baroda from onboarding any new customers onto its mobile banking application.
Okay, well, let's move on to the fifth headline today. Crude oil prices soared over 2% due to tensions in the Middle East that sparked concerns about disruptions in oil supply. That's not all. The industry data showed a bigger than expected drawdown in US crude stocks as the Israel-Hamas conflict worsened. Manisha Gupta is here with the market snapshot. Manisha.
Yes, the upside in crude has just about continued. After 7.5% of gains in the previous week, we have seen crude prices gain up by nearly 3.5% in this week as well. With near 3% of gains coming in today, the crude prices now are trading at a 2-week highs. Hundreds have been killed in a blast at Gaza hospital. And after US President Joe Biden says that it is not the fault of Israel, we have seen that premium build up in case of prices. So much so that we hit $92 plus kind of levels in the trade there. Apart from that, apart from the geopolitics as well, the support also comes in from the fact that the U.S. Crude inventories have declined by 4.5 million barrels on a week-on-week basis. That has been supportive. And then you also are looking at the China third quarter GDP numbers at 4.9%, coming in better than what the street was anticipating. And it is 1.3% quarter-on-quarter as well on the higher side. Also, when you look at the China September refining numbers, those are near record highs. So we are looking at stronger demand continuing in China. The China economic data growth coming in on the stronger side also has been supportive. Markets will now watch out on what the further development is and what does the US president say further during his visit in Israel. And the second point is really going to be about various US Fed officials who are slated to talk in this week, including Powell as well. And that would give you further direction.
Okay, Manisha, thanks a lot for that. With that, it's a wrap on this edition of Markets Today. Stay tuned for more news and updates.